Hey, my name is James Nicholson and welcome to this week's mortgage rate. So we do this video every week. It's been really popular with you guys. And what we do is we look at what are the best rates in different categories of mortgages. So we look for HMO mortgages, as you can see on this slide, which is houses of multiple occupancy. We look at buy-to-let mortgages in a personal name. And we also look at buy-to-let mortgages in a limited company, which is how you should do it now. And we'll also look at residential mortgages on various different deposit levels as well, or equity levels, as you might say. So this week's an interesting week because we've had inflation data out the other day. Inflation did drop, but not as much as we were hoping. We went from 3.4% to 3.2%. We were hoping we would go to 3.1%. And off the back of that, we've already seen some lenders that have increased their interest rates, the borrowing rate, the mortgage rate that you can get. It hasn't impacted the Bank of England rate because they haven't had a meeting yet, but the mortgage rate that you borrow at is actually gone up with quite a few lenders. So we'll see if that's impacted the best rates and deals on the market. And remember, this will change on a weekly, fortnightly, monthly basis. And the reason for that is that some lenders will always want to get higher up the search consoles or higher up the comparison sites. So if you think about it, when you go on a comparison site for your car insurance, your mortgage, or whatever it is, you'll pick the cheapest deal, right? That's how it works. And that's the same for your mortgage. When a broker is looking for a deal for you, they will pick the cheapest deal for you. They'll present you with, normally my broker will present me with 2 or 3 deals, 2 or 3 options that we've got there, but 9 times out of 10, we go with the cheapest deal. The only reason we look at the other ones is maybe there's a favourable exit if we want to exit the deal quicker, or the fees might be lower. We'll look at all of those things, but it's normally the cheapest deal that we'll go with first. So we're going to jump into that and more in this video. But before we do, make sure you subscribe to the channel down there. If you haven't done already, subscribe and hit that bell notification. We've got new content every single day, so you don't want to miss out on that. And smash the like button, tickle the like button, do something to the like button, guys. That really helps us with the YouTube algorithm. It gets more views on the content. It gives us more incentive to keep making new quality content every day. So quickly smash that like button. So Mortgage Works are the best deal this week for HMO mortgages. Mortgage Works are part of Nationwide. They're a massive lender in buy-to-let. I don't know why they're under a different sub-name, but you'll see a lot of these big companies might have 3 or 4 different lenders under their main name, right? So HSBC has First Direct and the Nationwide have the Mortgage Works. And so the Mortgage Works, the HMO rate, this is for houses of multiple occupancy. So this is where you're going to rent a property out on a room by room basis. It's a very smart way in order to leverage and make more money in your property. Now, their 5-year deal is at 5.34%. The fees are quite high on this. So for every 100 grand, you're going to pay £3,000 in fees. But if you spread that over 5 years, it's not so bad, is it? So it's about, well, under a percent extra onto the rate. And HMO rates are normally higher because they know that you're going to make more money. That seems to be the way that this works out. They'll lend you 75% loan to value, which is good as well. The 2-year rate is at 5.39 with the Mortgage Works again, 3% fees, loan to value 75%. Now, these fees I know are particularly high. They have been higher though. So this time last year, they would have been around 5%, 6% with some lenders. They're moving down. In the good times, this kind of fee would be around 1%. So it's moving in the right direction, but it is still relatively high at the moment. Next is a limited company buy-to-let mortgage. So this is how I recommend that you buy companies now, because it's more tax efficient. It's easier to pass it on to loved ones in the future, kids and stuff like that. So running it through a business is definitely the better way to do it. And so the Mortgage Works, again, they always like to be in the running for one of the cheaper lenders out there. They will lend you on a 5-year 5.34%. which is not bad. 3% fees, 75% loan to value. 2-year deal is under 5% with them now, which is good. 4.99, 3% fees, 75% loan to value. So that's a good option, and I would consider that. In fact, I've got loads of mortgages with Mortgage Works, so I think they're a decent lender. Now, buy to let in your personal name. I've got a number of these because I've been investing since 1999. I wouldn't recommend that you buy a buy to let in your personal name going forward, but I understand the majority of buy to lets are already in personal name because the rules that we have now weren't in existence way back when. So NatWest, they've been really competitive on deals recently, and we've seen them get headlines. I've done videos talking about NatWest pricing themselves really competitively to get business, and they're still doing that. So they've got a 5-year deal at 4.37%, close to being under 4% there. £995 as fees, 75% loan to value. So that's a decent rate. I mean, lots of people ask me, and I did a video this week, 2-year or 5-year, which would you go for? That 5-year is not bad, is it? Like, it's not particularly bad if you want certainty, and particularly if you're early on and you don't have much equity, it could be a good rate to go for. 2-year deal, 4.75%. Again, not a bad rate. Both of those with £1,000, well, just under £1,000 of fees, 75% loan to value. So they're worth considering for sure. Now, residential mortgages, these are if you've got 25% equity, or if you're a new buyer, 25% deposit. I don't think many people have a 25% deposit in this market, but a lot of people do have equity already in the property. And so Barclays has got the best 5-year deal, 4.37%, with 995 in fees, 75% loan to value. That's a decent rate. Remember, a year ago, these were at 6.5%, 7%. And so they and the fees were crazy, especially when Liz Truss had just been in power. So it's moving in the right direction. 2-year deal, 4.59% with NatWest. That's a great one to look at. Fees are slightly cheaper than their buy-to-lets. 899 on this one, which is decent. And so that gives you, if you've got 25% equity or a 25% deposit. Next, residential mortgages, if you've got a smaller deposit. I don't look at ones where it's 5% deposits. I think they're a little risky because the market could easily go down 5%. You could get in negative equity. So if you've got a residential mortgage and you want to buy somewhere, or you've got a small amount of equity, so you've got 90% loan to value deals here. 5-year deal is with HSBC, and that's at 465, 4.65%. That's decent. And the fees are 999. 2-year deal is at 5.05%, and that's at 999 fees as well. So these are pretty good. What am I expecting short term? Because over the next week or so, we've had bad inflation data now, and that is starting to feed into the mortgage market. I think short term, you're going to see some slight increases. Next week, I would bet that rates will be not loads more, maybe 0.25% more at worst, maybe 0.1% for a lot of them. But I do think rates are going to temporarily go up until we get a bit more certainty. We don't have that certainty from the Bank of England. What's going to happen? What's going to work? Is interest rates going up? Don't think that that's a chance that the Bank of England rate will go up, but I do think mortgage rates will go up, and I think it's going to be much longer until the Bank of England do a rate cut, maybe September, if all goes well. So lots to consider here. Would I fix a rate now? Yes. If I was looking to remortgage, I would fix my rate like this HSBC rate at 4.65. I'd fix the rate today with the bank, and then if I've got a period of time, like 3 or 4 months, 6 months, until I actually finish my old deal. If a better deal comes out in that time before you start this new deal, then you can switch on to that better deal. But I would fix today to give you the certainty and make sure you know exactly what you're going to be paying, because I do think that they are going to temporarily go up a little bit, and I don't think you're going to get massive reductions by the end of this year. But who knows? No one knows for sure. Anyway, let me know what you think in the comments. Have you found some better rates anywhere? If you find a lender that's got better rates, or you've secured a really good deal, or you've got any feedback, do comment below. I reply to every single comment on this channel. Do smash subscribe if you haven't done already. Do hit the like button. We're very close to 22,000 subscribers now, so you could be that 22,000 subscriber. Have a look around, you'll see how close we are. So do subscribe. Do check out some more content on my channel, including this video over here.